Hello from HSBC Hong Kong, I'm Fred Newman.
And I'm Herald van der Linde. You're listening to Under the Banyan Tree, where we put Asian markets and economics in context.
The eyes of the world remain on the Middle East this week, and that continues to shape a lot of our thinking here in Asia as well. Last week we talked about the immediate effects of a volatile oil market on Asian economies, and this week we're looking a step beyond that.
Today's focus on the second round effects of the conflict, what happens further down the line, if you will. This affects companies, consumers, policymakers, and touches on key global investment themes from energy to artificial intelligence.
Plenty to get through, so let's get the conversation started. From HSBC Global Investment Research, this is Under the Banyan Tree. So, Herald, last week we talked about the impact of higher oil and gas prices on Asian economies, and that's kind of the obvious economic consequence of the conflict that we're witnessing right now, the tragic conflict in the Middle East. But we also wanted to tease out some of the other implications. And you've written a very interesting report on some of the secondary consequences on this. And one thing you mentioned is other raw materials, actually. The Middle East is known for exporting gas and oil, but other raw materials are playing a role as well.
Well, as you know, Fred, oil and gas are inputs. There are all sorts of derivatives that came out of the crack, the oil, you could say. And that goes down to fibers, that goes down to plastics. So, for example, packaging cost for some food and beverage companies is about 30-35% of overall direct cost, not the marketing cost. We call that cost of goods sold. So the product cost, the making of that particular.
So these are your plastic wrappers,
exactly,
your cardboard boxes,
but also bottles, PET bottles,
of course, yes,
and these sort of things. Now these prices will go up and down as well. They will be volatile as well, right? So companies have to deal with that. So that's one of these consequences. But also think about, for example, cement companies. Cement is an incredibly energy-intensive sort of business. So they will have to deal with that as well. That might mean that cement prices go up. So raw materials and these input costs are very important. One in particular as well, natural gas accounts for 70 to 80% of making of urea, which is a product that goes into fertilizer. So fertilizer costs can go up. And of course, that has impact for the agricultural sector.
That's right. And I think that's where, at least on the economic side, we're starting to worry a little bit about the potential impact on food prices globally. Now, the Middle East itself is not a big food exporting kind of region of the world. But if energy costs go up and fertilizer costs go up, then there is an indirect link to food the cost of food production.
Exactly.
And that then raises essentially the cost of food. And of course, always when we saw in the last few decades big spikes in prices, the most dangerous, if you will, was always the concurrent price spike of energy and food prices. That happened, for example, in 2008, where there was a big inflation shock across the region. Of course, and the challenge is that tends to hit some of the poorer population in the region.
It impacts a lot of people, and of course also, unfortunately, lower incomes very often more because their exposure to food expenditure is higher than people that have more money to spend, right?
Yeah. So what we have here is clearly it's not just about oil for transportation or for heating, gas, but it's also some of the feedstock chemicals go in there. You mentioned cement, for example. We mentioned fertilizer and the impact on food costs, as well as transportation of food, of course. Nylon, I think, is in there as well. There's the fibers for clothing come from that as well. You mentioned packaging for food. So it's a whole kind of range of products that are impacted. And often people don't think immediately about those.
Yeah, those are these sort of unintended consequence, second round effects that only become apparent very often to us in markets when these prices shoot up or a company says, hey, our costs have gone up. And then we realize these linkages there that are not always easy to identify in the beginning.
Now, another, if you will, unintended consequence or another kind of byproduct of this is the impact on tourism. And there's several channels, I think. One is, of course, if there is risks across the world, people are reluctant to travel long distances. Then you have higher jet fuel prices.
Exactly, so the ticket prices
go up.
But there's a second sort of way that impacts companies in Asia, medical tourism. is a big thing. So India, Thai hospitals, Singapore as well, some of them have a lot of exposure. Some of the Thai hospitals are specialized in this. So about 2/3 of their overall business is medical tourism. People that come to Thailand, do a checkup and these sort of things. The Middle Eastern patients, if you want to call it travelers, are a big component of that. So some of these companies are really exposed quite a lot. It's 20-25% of their overall business.
So these are wealthy kind of Middle Eastern residents coming to Asia for medical treatment. So it's a form of tourism.
Yeah, it doesn't even have to be wealthy, because some of these people just go on a holiday in Thailand and say, listen, why don't we just take 2 days to do a health check or something like that? So that happens as well. The Indian hospitals do this as well, but this is a much smaller business for them, so they're not exposed. Really, the Thai hospitals are probably most exposed to this. And as I said, it could be 1/5 to 1/4 of their overall business.
Yeah, and that's an interesting niche is medical tourism. But on a broader scale, you also have the impact on general tourism, right? So economies like Sri Lanka, for example, rely a lot on European travelers, often via the Middle East to Sri Lanka. Same in Thailand, same in Vietnam, for example. So the European visitors coming to Asia have bigger hurdles to bypass, capacity constraints in terms of travel, higher ticket costs to come to this region. And that's not always easily offset by regional tourism. So there is certainly going to be an impact there as well.
Absolutely.
Now, speaking of travel, and another interesting consequence is actually the impact on remittances. You have some economies in Asia where remittances, that is, domestic workers going overseas to work in another country and sending back money, is big business. So in the Philippines, it depends on what numbers you use, but it could be up to 10, 12% of GDP in terms of money that's being sent back that drives domestic consumption, that drives domestic housing construction even.
But I'm also thinking India and Bangladesh, I presume, right?
India, Bangladesh, of course, certainly. Bangladesh, very important. And so apart from the Philippines and Bangladesh and India, it's also Sri Lanka, big kind of overseas community. But even Thai workers are found in the Middle East working and sending money home. And so now the question is, of course, first of all, what's happening to them security-wise in the Middle East? They're obviously a personal risk. But also you can't deploy into the region anymore. You can't really travel there as easily. But also to the extent that businesses there ground to a halt. For example, in the energy sector, there's a lot of foreign workers.
Yeah, and these people don't get paid. But this will have a knock-on effect if they don't remit their earnings back to, say, Bangladesh. Families there are dependent on it in terms of their consumption, right? So that has knock-on effects on consumption.
Immediately a knock-on effect on consumption. So I think already from the discussion here, we see quite a few consequences that people don't pay that much attention to. So from plastic bottles to food costs, fertilizer to tourism, medical tourism, but also to remittances. Yeah. And maybe this is a great place to take a quick break. And when we come back, I want to ask you about what all of this has to do with AI. And is there a parallel, or at least a risk, we can draw from the events in the Middle East to AI? So, Herald, big story last year was AI. Continues to be a big story. What does this conflict have to do with AI?
Well, from a purely Asian point of view, think about it. The tech companies in large parts of Asia, so Taiwan, Korea, mainland China, many of them provide, we've spoken about this before, components to US companies that are building out AI data centers, hyperscalers in the US or in Europe. These data centers are highly energy intensive. They are sometimes being funded by, for example, Middle Eastern investors. So you can see that there are a couple of touch points here with that industry that might mean that the appetite to spend money in here is going to be reduced, and that will have an impact on the order flow.
So you're saying that one of the consequences here is, of course, if there's a permanent increase in the cost of energy globally as a result of this conflict, then it's also going to be more costly to run some of these data centers because they're very, very energy intensive. But But you're also saying that potentially some Middle Eastern investments might be disrupted to the extent that the Middle East is a source of global capital. And so that would, of course, disrupted as well.
Absolutely. And that might have an implication on the order flow for the very components that are made in this part of the world. The servers, the coolers, the chips, all the other components that, Asia has done so well over the last 12, 18 months in exporting that. Yeah, that might diminish. It's something that we need to keep a close eye on.
And of course, then there is another potential linkage here, and that is through interest rates. That is, if we see this conflict being inflationary, and if that then means central banks will have to raise interest rates, that would raise the cost of funding. And of course, any borrowing will become more expensive, and that could then have implications for global investments. For any sector.
And that is, I think, already priced into markets to a certain extent. We've seen an increase in bond yields, say, over the last week and 10 days or so, to reflect the possibility that, there will be more inflation and potentially higher interest rates than what they initially thought, say, 2 weeks ago. And all of that needs to go into the spreadsheets of the people that have investments to make around the world, say, are we going to make this investment or not?
Yeah. So, as we record this podcast, of course, tragic events unfolding still in the Middle East. We shouldn't gloss over the fact that a lot of lives are being affected by this. But in some ways, as we discussed with food prices, for example, fertilizer prices, with tourism remittances, it affects lives also in many parts of Asia, where a lot of livelihoods depend on sort of a healthy economic relationship with the Middle East.
Yeah, there's all sorts of unintended consequences, very difficult to see them at the moment, but that might suddenly rise, and it's important to think about that. Well, that's all we've got time for on this episode of Under the Banyan Tree. A big thanks to all of our listeners for tuning in.
Indeed, this is an unpredictable situation, but we will be following developments very closely in the coming days and weeks. Clients can, of course, see all our Middle East reports on the Research mobile app and at research.hsbc.com.
Under the Banyan Tree is an HSBC Global Investment Research production produced by Graham Mackay. Take care. Till next week.